Hey everybody, good to be here. It's time for Market Movers, and we're capping off our market week here by looking back at the week that's been and the week that's coming up. And I'm glad you're here along for the ride. It's a short session, it's only half hour long, and so let's get to it. I'm joined alongside Mike Fairborn in the chat. Feel free to follow Mike or myself on X at Brentmore CS, at Mike Fairborn CS. Let's hit up the disclosures. Information today is for general informational purposes only. And don't consider that an individual recommendation or personalized investment advice. Options carry a high level of risk. Are not suitable for all investors, although I don't think we'll be doing options today. I will be looking at individual stocks today, though. And you know what? Those are not recommendations. We look at what's moving in the market. And sometimes those are good stocks, sometimes they're bad stocks. But we're not taking a stance on that. We're just going to look at them. Paper money application is provided for educational purposes only. And past performance is no guarantee of future results. Schwab does not recommend the use of technical analysis as the sole means of investment research. All investing involves risk, including potential loss of principal. Good to see you guys in the chat here. I see some familiar names there. We're going to go through general trend of major market indexes. What moved markets this week? How various sectors did as well. Let's head on over to the Thinkorswim platform. Let me just shrink this down real quick. This is the S&P 500, everybody, and we've had quite a run. In fact, what I want to show you is, you guys can see the trend. This is a 20-day moving average. This is a 50-day moving average for your perspective. These were the previous all-time highs. We keep going up, and there's been, some negative news that could have potentially spooked the market. But each day, sometimes we're going lower in the day, but we've finished, any big sell-off has been, we've had a rebound on. And not only that, we've seen some market breadth too. Let's do this. Let's switch this to a 3-month graph. And I'm going to make this a percentage graph. Okay, so I'm going to show the price as a percentage. So over the last 3 months, the S&P 500 is up about 16%. Okay, that's pretty good, right? So over 3 months, 16%. Okay, let's look at the SPXEW. So this is SPX. I put in the wrong symbol. This is the SPX equal weight, up, just a smidge shy of 14%. So a little bit shy of the SPX. Now the market sometimes has kind of this wrap of large caps. It's all from Mag 7 stocks, and there's not other participation. So I want to talk to you a little bit about market breadth today, because there's different ways to measure market breadth. So one is you can look at the SPX and the SPXEW. Sure, fair enough. Okay. Another thing you can do is you can look at the percentage of companies above their 50-day moving average. Let me just go back to a plain chart on this 1 sec here. Okay, let me just do, what am I doing? We'll just do that. Okay. So percentage of the S&P 500 that is above its 50-day moving average is about 68%. So 2/3 of stocks are above their 50-day moving average. That's essentially, on this chart, this is the blue line there on that. So 2/3 are above that. So what you don't want to see, well, often what traders don't like to see is where you look at the market and the index is going up, but most of the stocks are failing. They're doing worse than that. There's different ways to look at this. And one way is to go, when people want to look at market breadth, one way is to go to the Visualize tab. So you can just go say S&P 500 and you can look, and this is just for today, but look, I can see in the green which stocks, some of these big boxes are green, okay? But probably more boxes than not are red. If I want to quantify this, what I can do is, instead of where it says heat map, change this to index watch. And now I can see declining 384, advancing 116. So in the S&P 500, okay, in the S&P 500, it's, what's that, 3-to-1 decliners versus gainers today on this. Maybe it's a little bit harder to see on that heat map, okay? Maybe it's a little bit harder to see on the heat map. I'll show you guys how to show that percentage graph again in a sec here. They'll say, Mike's, there's a question. I think the question applies more than just one person. It probably applies to a lot of people. So I'll go through it a little quick, slower for you as well. But I'll do that in a sec. Here's the heat map. So today at least, the rally is not broad-based. I mean, we're overall down a little bit, but it's overwhelmingly negative today. Now, just a little trick on here. If I want to do this as well, you can look under S&P 500 and you can look, say, at information technology, okay? I can see the same thing for any individual sector to see how it's doing, okay? So there you go. Now, let's go back here. Let's go back to charts. Let's go to that Russell 2000. So here's small caps, because small caps have underperformed for a while. Let's go back to that percentage chart here. We were looking at a 3-month chart. Let me just pull up a 3-month chart real quick, okay? Here's a 3-month chart. The easiest way to do the percentage chart, there's different ways to do it. The easiest way to do that, I think, is go to the little squiggly line right here. Just click on the little squiggly line and go to show price as percentage right down there. Just click on that, okay? There we go. There's our percentage return. Now, what do we got for small caps now? Small caps, which have underperformed for like seemingly years now, to be honest, up 20% over the past. So small caps over the last 3 months have actually been outperforming large caps. So on an individual days basis, yes, today we don't have a lot of market depth. Well, good market depth. The market depth is to the downside. And but over the last 3 months, we actually have pretty good breadth in the market right now, okay? We actually have pretty good breadth in the market right now. Now, let me just show you one other example of this, and then I want to move on. Let me go to MarketWatch, and I want to go to consumer discretionary. Okay, look at consumer discretionary. Oh, it's actually changed a little bit from when I was looking earlier. Consumer discretionary, which was actually been up for the day, okay? So I can look, let me go right here and let's look at consumer discretionary. Is it still up? Yeah, consumer discretionary is up 0.25% today, okay? So you're going, oh, great, consumer discretionary is doing great. Let's go to that MarketWatch tab. And it looked even better before. It was more of a stark difference before because I don't think these were up, but it was like all red, and Amazon, which is a huge part of consumer discretionary. You can see the percentage. I mean, here's the whole box, the whole pie, so to speak, right here, square pie, I guess. And how much of this is Amazon? Maybe like, what, 40% or something like that? That's a rough guess. But that's why the sector can be up, even though there's a whole lot more red stocks in there than green stocks, okay? So let's move on. Let me go back to our charts here. That's our first thing on market breadth. I just want to mention that. So now Amazon has done very well. Why did Amazon do so well? Well, Amazon's doing so well. Morgan Stanley raised the firm's price target on Amazon to $300 from $250 and keeps an overweight rating on the shares. JP Morgan raised the firm's price target on Amazon to $255 from $240. Piper Sandler raised the firm's price target. Do you see a common theme? That happens a lot, by the way. And that's one reason why some investors, when they see an upgrade, they like to get into the stock. And this is not a recommendation because this is by no means foolproof. This is just one approach. They like to get into a stock because other analysts will kind of piggyback, so to speak, on that first analyst when they give the upgrade or the downgrade, by the way. If it's a downgrade, other analysts tend to downgrade at the same time. So that's what happened on Amazon today, explaining the 1.5%, which may not sound spectacular, but given the rest of the market, that was not a bad day there on Amazon. In terms of how are we feeling about the market? How's everybody feeling about the market? Well, let's do this. Let's look at the VIX. Let's kind of give you a general investor sentiment here. The VIX is up a little bit today, up over 16, but hey, 16 is pretty low. It doesn't seem that people are the market right now isn't too spooked by tariffs, to be honest. We've got a lot, we do have tariff news, folks. It's in the news every day, and it can affect the market. In fact, let me show you this. I tweeted this or retweeted this today earlier. This chart, this is from Schwab, is the data, okay? Source, Charles Schwab, Bloomberg. I tweeted this out today, earlier. April 2nd tariff rate, August 1st tariff. So this is like kind of the projected tariff rate if all goes through. And you know as well as I know that this is a changing story, okay? It goes up, it goes down, it goes up, goes down. I don't know. I have no idea where those tariffs are going to be on that day, okay, on August 1st. But let me just mention this. We'll point out something. Brazil, okay? Brazil proposed tariffs April 1st, 50%. Now, would I be surprised if it's not 50% on April 1st? No, I would not be surprised in the least that it's not 50% on August 1st, excuse me. But one thing, I don't have the ticker for it. I don't have a chart for it. But if you look at orange juice futures, they were up 10% today. Why? So much of our frozen orange juice comes from Brazil, for example. Okay, so these do affect things here. But the bigger news was Canada. I mean, well, yeah, probably the biggest news I would say maybe was Canada in terms of effects there. So that if there was a kind of a frightening of the market, number one, it wasn't. It didn't freak out the market too much, as evidenced by, yeah, the market was down a little bit, but it wasn't drastically down. The VIX is up a little bit, but not drastically up. So the market's kind of going, tariffs, that's old hat, old news. I know that already, okay? So let's look at some other things going on in the market. Number one, interest rates. Because let's talk about interest rates for a sec. This is the 10-year index, okay? For the actual rate, you got to move the decimal point over a spot. So 4.4% on the 10-year. There's a lot of discussion about the Fed lowering interest rates. This is not the interest rate that the Fed just, boom, lowers, okay? You need to distinguish with interest rates between long end of the curve and short end of the curve, short-term rates. The Fed can control the Fed funds rate. That's what they're talking about potentially lowering. This is the long-term rate. They're driven by different things typically. This is kind of a generalization. Short-term rates are more driven by what the Fed does. Okay, it uses it for its monetary policy to juice the economy or put the brakes on the economy. Longer term rates, that's a different story. In fact, you know, last time we got an interest rate cut, let me point out to you what happened last time the Fed cut interest rates. Let me go to a longer term chart here. Let me go to a year chart. It was here. That's the last time the Fed cut interest rates. Then what happened? Interest rates went way up on the long end of the curve. Okay, so that may not affect it. The long end, the 10-year, is more affected by perceptions of economic strength, okay, and inflation. Those two things probably are the things that are going to affect the long end, the 10-year more than anything. Inflation and perceptions of economic strength, okay? Now, the Fed, who knows what they're going to do? Are they going to cut in September? I don't know. The dot plot says, I think, likely a cut in September, excuse me. But there is it's far from unanimous. If you look at the votes of the individual governing members of the Fed there, widespread in terms of what their expectations are. That's why they do that dot plot, by the way. I'm not going to take the time to show you it right now. But that it can certainly change. We've seen that. You guys, if you've been watching this over the last couple of years, the perception, the market perception, and what the market's Fed fund futures are expecting for interest rates is very different than what we've seen. And so, I don't know. I don't know. Here's the thing that's going through Jay Powell's mind. Okay. I'm speculating. I don't know what's going through his mind. He is more worried. He's worried about adding fuel to the economy, i.e., lowering interest rates, because that could, his worry is that could help to kick up inflation. If you're already concerned about inflation. How's inflation been going? Inflation's been going okay. Okay. Most of the fears that people have had about tariffs so far have not really come to fruition. Okay. Have not come to fruition. Now, there's two camps on that. There's two camps to everything, isn't there? There's different sides of the story, isn't there? Always. Okay. One side of the equation says, hey, look, the economists kind of got it wrong. The tariffs and threats of tariffs haven't really boosted inflation that much. Okay. That's one side. The other side is most of the tariffs really haven't even had any chance to, most of them haven't even set in yet to a large extent, to their fullest extent. And we haven't seen it in the data yet. Therefore, we're not seeing the inflation yet. Which is going to happen? I don't know. I don't know. We'll see. I'm no expert on it, folks. I'm just telling you what I see. So that leads me to, let's talk about the week we've seen and the week ahead. Okay. So we've had earnings is coming up. Earnings season is coming up. We just had Delta release. Look at that on earnings. Let me zoom up. Earnings on Delta. Okay. So beat on the top line, beat on the bottom line, and they also gave a forecast. A lot of companies have not been giving economic forecasts because of uncertainty. They say, well, you know, the whole situation, again, T word, tariffs, because of that and whatnot, and there's just enough uncertainty, we're not even going to give a forecast. They gave a forecast, and so they gave forward guidance, and it was positive, and Delta Airline loved it, and you know what? They're not the only ones that loved it. You could probably guess some other companies that loved it. Look at this. Here's United. United, look at that jump in United. That's a big jump. Down a little bit today, okay? But that's a big jump. That wasn't on their earnings. Their earnings doesn't come out for a week or two. But you could pull up other airlines. They had a sympathetic jump. Why? Because if Delta is seeing certain trends in the economy, it's likely to affect their peers too, right? So that's UAL, okay? Let's try, here we go. There's another one. What about Southwest? Let's try that, okay? Same thing. They actually went up today. They're not down much though, like UAL, okay? All right, so that was last week's earnings. If we go to the Market Watch tab and go to calendar, and this is S&P 500, there's Delta, we just had that, and you can see going ahead. So coming up next week, Fastenal, not a, you know, that's ConAgra, what's today? That was yesterday, ConAgra already came out. Okay, Fastenal, but look at this. BlackRock, excuse me, Bank of New York Mellon, Citigroup, JP Morgan, Wells Fargo, Bank of America, Goldman Sachs. Do you hear a commonality between those? Those are all financials. That's earnings season, folks. Earnings season kicks off with financial companies. So, in fact, in the prior webcast, we did a example trade based on earnings on JP Morgan, because that's what's coming out next week. Now, that can add to volatility. Now, earnings season doesn't end next week. Earnings season begins next week. Let me just switch this down to the S&P 500, okay? Let's see, public, S&P, excuse me, S&P 100. So I cut out some of the extraneous stuff there. Okay. So here's all those financials we were just talking about, right? But that's the 15th, which is, what day is that? Is that Tuesday, Wednesday? I can't remember. But next week we also have Netflix. That's kind of a big one, right? That's one of those old FANG stocks, right? And there's other names out there that you're going to be familiar with. Coke, GM, okay? Lockheed Martin. If you scroll down the list, what you're going to start to see is, as we go forward weeks, Alphabet, Tesla, Merck, Starbucks, Microsoft, Meta, Apple will be there. I don't know exactly what day that's in. There's Apple. Okay, so that's coming out. Coming up. Earnings, you got about 3 weeks of just nonstop craziness with earnings. That can affect the market. Okay, so if we're going to think about things that are going to affect the market, earnings can affect the market, economic reports can affect the market, and then news can affect the market, right? Stuff we don't know. I mean, earnings we know is coming up. We don't know what they're going to be. Economic reports are coming up. I'll show you that. I don't know what it's going to be. News, I have no idea what the news is going to be there, okay? So let's go to economic reports here. Let me just bring up, this is schwab.com. I'm logged in. I'm on the research and US markets page. Scroll down on the right, we got economic, okay? So we're going to click on this. This is this past week. This past week, we had FOMC meetings. That was kind of a non-event. Not much, I think, really informed us new on that. It's kind of same old. There wasn't really, this week was kind of a lighter week in terms of that. That is not the case for next week. Let's go forward to next week. Because here's our economic events next week. We're kicking it off with probably the biggest, when I say the biggest one, the one that is most likely to move the market next week. Now, what determines what's going to move the market? Number one, what the economic report is, and number two, how far that economic report varies from its forecast, okay? But in terms of what probably the most likely one, CPI, Consumer Price Index, because that's going to affect, that's an inflation report. Now, PPI does as well, but CPI is coming out first. And here's the thing with CPI, okay? When we talk about CPI, the nice thing, I don't know. The significant thing about CPI is it's not just an overall number. Yes, you've got CPI, you've got core CPI, which strips out food and energy, but it gives you other numbers. It breaks it down into different components. Food and beverages component, housing. By the way, so that includes like rents, utilities. It breaks stuff down. Apparel, transportation, medical care, recreation, education, communication, other goods and services. Okay, so you can extract different things from CPI. We look at it month over month, we look at it year over year, you can see what it is. That isn't significant just because, look, we all care about inflation, but it can potentially affect future interest rate policy, which affects the markets. The markets would probably, sometimes we get this good news is bad news is good news thing, okay? But if we have a hot CPI, okay, that'd be bad news there. That would also probably mean that the Fed is less likely to make that September cut, if that's going to happen. I have no idea. So that would be a bad news is bad news situation, probably. Inflation bad is bad all around. The intriguing thing would be is if CPI comes in light, comes in soft. Does that influence the Fed more to cut interest rates? How much, by the way, going back to the whole Fed cutting interest rates, how much of it is Jerome Powell? This is total speculation, by the way. How much of it is Jerome Powell is getting a lot of pressure? The president is pushing a lot of pressure, constantly saying negative things about Jerome Powell. How much of it is that just going to entrench Jerome Powell into not wanting to cut, to show that he's not being bullied, so to speak, or pushed by Powell? I don't know. That's speculation. I know he would say, look, well, I'm just doing what's best for the economy. Right now, there's enough uncertainty. We don't want to cut. Okay. So in the chat, PPI prior? No, PPI is after. PPI is after. PPI is on Wednesday. So corp CPI, Monday is probably the biggest thing. Second thing, probably PPI, I would guess. I would guess PPI. We got retail sales too. There's a lot of these, okay? A lot of these reports, most of these are not going to affect things. PPI, CPI, retail sales is probably the other big factor that is likely to move the markets this coming week here. So that's economic. We talked about earnings. We talked about economics. Let's just take a quick look at sector action, then we're going to wrap it up. Okay. So when I'm looking at sectors, let's look at today. I've got two columns here. I've got today. Let's sort that. Today and over the last month. Today's winner, energy, up. Well, look, let me go back. Well, crude oil up 3% today. Okay, crude oil is up 3% today. Now, this isn't energy. I'm going to go on a quick tangent here. Other news this week: copper tariffs. What happened to copper prices? They shot way, way, way up. They shot way up on a couple days ago. That's copper prices. Why would they shoot up with tariffs? Well, think about it. Okay, copper supply is there, but it makes copper more expensive. Okay, it makes copper more expensive, which in a sense, way to think of it is, it's kind of constricting the supply in that way. Okay, so that's copper. But let's go back to sectors. Energy up about 0.5% today. Consumer discretionary, largely due to Amazon. Utilities, mixed, communications mixed. Healthcare was down a fair amount, financials down, materials down. Obviously, financials are going to be moved next week a lot with earnings. Over the last month, though, what's been best over the last month? IT up almost 8% over the past month. Industrials, energy's been stronger. Okay, staples has been the loser. Healthcare, real estate. These are typically more, by the way, let's try that again. These typically are a little bit more on the defensive side of things. In other words, they tend to do better when the market's not doing as well. Well, market's done fairly well. These have underperformed. IT and industrials tend to do better when the market as a whole is doing better. Okay? All right. Hey, we're out of time there. Everybody, thanks for joining me today. Thanks, Mike, for helping me on the chat, of course. Everybody, we will see you all next week. Everybody have a wonderful weekend. Hope things go well for you. Everybody, have a great day. Bye-bye.